Okay, so now I'm live. Now I got it. This is take 4. Let me do a sound check here and see if I actually have some sound, because this is my 5th time doing this. 4th time, but I started it just a little bit ago, and turns out I started the broadcast, but I didn't start the stream. Two different things. Man, I'm old. Trying to get through this technology thing. So, anyways, I enjoy. Yeah, there we go. There's the audio. Okay, so I enjoy bringing this information and um, the this presentation, because I'm doing this anyway, right? So if I'm doing this anyway, you guys might as well join along for the ride. I mean, no sweat off my back, really. But I'm not going to keep giving all this stuff away for free. Um, I'm not saying I'm going to charge for it. I'm just saying that I won't. Yeah, I won't. I don't think I won't charge for it. I won't say that. What I'm saying is that um, I won't continue giving away gold nuggets forever, just because you know not enough people show up. Now, people start showing up, then maybe. But anyway, that's neither here nor there. What I'm talking about today is I had a revelation, right? Because I'm always looking at TQQQ. I want to trade it. It trades at about $45. Let's see. Let's go ahead and put it up on the screen back here. It trades at about $45 or so, and it's you can trade it with a smaller account than trading something like the one of the higher cost ETFs. But I've been doing a lot of codes with TQQQ, and I realized that TQQQ is a derivative of the index. It's supposed to follow the index. It's supposed to be a leveraged 3 times ETF. So why am I trying to anticipate what this ETF is going to do when it's based on an underlying asset, when it's based on the index? So again, for the 5th time, the index is more like the teacher, the leader, the group leader who leads the kids, and the derivatives, everything that comes from it, is the ETFs and everything else. So I've been looking to see what these kids are going to do. Meanwhile, I need to be seeing what the leader's going to do, right? Because the kids, they're bumping in line. They don't know which way to go. They're like, "Where's the group leader? My back is turned." So they don't know where to go. And I'm trying to anticipate future moves based on current moves of the kids. But this kid is turned to the left. He's going straight. He's sidestepping. He's following the leader, but he's turned to the left. So how can you use that to really truly be an indication of what's going to happen? So I said, all right, well, I need to look at the underlying asset, what's going on, underneath the hood. So I need to look at the actual index. So that brought me to CompX. I think it was CompX. Please be CompX. It's not CompX. What was it? Let's see. Because I just brought it up this morning. I'm like, yep, I'm gonna start doing that. Dang it. Was it $ comp? All right, I'm gonna have to search for it now. But this is what I'm gonna be working on. Oh, wait a minute. TQQ second display. I might already have it pulled up. So I'm going to be creating algorithms to locate entries. All right, so this is SPAs to locate entries for this for the index. And because the index is showing the actual volumes and everything, what's going on underneath the hood, TQQQ, the market makers have to make it work. They have to go from here to here. They know that there's a lot of orders here, but it doesn't matter. They have to get to here to follow that index. So it could be, so the actual index could show, a low amount of volume from here to here, but because traders and people like myself who may not be in at the right place may be bunched up just above it, market makers have to get through this bunching to get down to here. So whereas the index may have showed low volume getting to here, TQQQ is going to show a high amount of volume here and then come down. So, you know, which one should you be following? Should you be following what's happening with TQQQ or the index? I say the index, and I may be wrong. Usually I am. Nevertheless, that's where I'm headed to now. The matriculation, the maturation of all of my studying and habits and perseverance is taking me down this road. So I'm going to explore this road, and then I'll let you know how it goes. All right, so edit symbol. So we want to add symbol and complex. Is that it? That's what I'll put in. All right, so I'm going to have to search for it anyway. Data, add symbol. Let's look it up. It's under the index, and let's do NASDAQ composite. Now I did a 5-minute time frame code for you guys earlier. There it is. $CompX. I'm pretty sure that's what I put. All right. Wait a minute. I thought that said something a little bit funny off to the side. NASDAQ. On the NASDAQ's exchange. I don't know what that is. All right, but I think that's what we're looking for. Okay, so we're going to plot it. I think that's what I just did, and it didn't go. It didn't. For some reason. Oh, yeah, it's underneath. All right, so, but I want that as my primary, not $CompX. $CompX. That's what I did earlier, and it didn't show up. Now it is. All right, so let's get this out of here. And this out of here. All right, guys. I really wish you were with me when I went through the algorithm, creating the algorithm for the 5-minute time frame. All right, I'm going to do it really quickly now, and hopefully I can put something together similar to what I did earlier, and you will be proud of me. Okay, so let's go to the coding language platform, the coding environment. Dum, 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 dum. Okay, so all right, so this is how I start. All right, so I go and pull up a show me. That creates dots on the screen. All right, so then I'm going to do exclamation mark. We're going to do 5 minutes, 5M, and then we're going to do the date, which is 07/31/23, and then we're going to do $CompX, because that's what we're trading. We're going to do show me dip. All right, so this is my template. I created it. I love it. All right, and so the first condition is going to be true. That's always true. I just leave that there. That's a placeholder, and then I go in for my next one, and then so as far as over here on the screen, oh, you don't see my easy language info. There we go. All right, so you can see that. Lock that in place. All right, so we come back over here, and then so the first thing I'm gonna look for is, all right, so I'm gonna figure out what I want to identify, which is, this computer could not be slower. It could be. It could be slower. All right, so I want to get an entry over there. I want to get an entry over here. These are my nice little pullbacks for this day. All right, so what's happening here? Let's see if I can get rid of this because this is slowing me down. I'll close that workspace. Let's save it. All right, just make sure I don't have anything else open here because all this data coming in is, yeah, slowing things down. All right. All right, so I want to identify those areas for entry there. So this here, this open, close, open, close, open, open, close. So they're open and closing below the 9 moving average. So we're going to do that the open is less than simple moving average of the 9. And then we're going to re-verify. And so it'll put me dots along here. Come on. Oh, I didn't pull it up. All right, so let's add the study to the chart. It's a show me. So remember what we named it, exclamation mark 5 minute, 731 complex. Yep, add that. All right, so the code that I put in here already, just with the open being below the simple moving average of the 9, is giving me these potential entries. All right, and I mean, I know that some of you guys trade below or at the 9 moving average, so that would be, at its simplest form, that would be your strategy there, right? So get in here, put a stop loss down here, whatever, it drops down. Get in here, put a stop loss down here, it drops down, takes you out, and then you're done until it comes back. Okay, got it. But let's see if we can clean it up a little bit better so we can have better entries, less signals. All right, so and my 9 simple moving average is the black line. The yellow line is the 15 simple moving average. The green line is the 25 simple moving average. Now this dotted line, the dotted lines are the moving averages, but they are the exponential moving averages for each of those respectively. So we're coming over here. When I look for dips, I'm actually looking for bearish candles because I don't want to use this as a signal to get in, right? Because now it's closed up here. So now if you get in up here, you're really waiting. It goes all the way down before it comes back up. Now you're at break even, right? And now you're deciding whether or not you need to break even, get out, or hang on. So I'm looking for this candle here to get in at, which is the retracement. So I want to get in on a bearish candle, which I would identify as a close being less than the open. Okay, close. I didn't put that comma. I didn't do that. All right, so it's yellow. All right, and then one of the other things for my 5 minute studies, I make those blue. For my 1 minute, I make them green, and for the 15-second, I make it yellow. So this needs to be blue and not yellow. Make that blue. All right, so now that it changed that. Okay, so it's blue. Now, how do we? All right, so this is good. We identified that. This is good here. I mean, it's a little bit of a pullback, but it comes up to break even, and it retraces. So maybe we could get in there. That's fine. All right, and then here for sure. So, but really I want to identify this one and this one. All right, another one of the things that I typically don't like to see are these top wicks, right? So these top wicks, long top wicks. So I'm going to come over here and I'm going to get rid of anything with a long top wick. So it'll be like top wick is less than 50% of the range. So the range is the entire range of the candle from the high to the low, and 50% of that is half. So this top wick needs to be less than half of the length of the entire range, right? So we go ahead and verify that. Should get rid of that one and that one. Yeah, all right, so now we have this one. So this one we definitely want to keep. These two are cool, but one thing we could look at is the overall range. So the range here is kind of long. This range here is kind of medium. These ranges are smaller, from high to low. Those ranges are smaller. This range here is long. This range here is smaller. So I could go with something with range, like range being small to medium, but it would get rid of this one because it's large. It would get rid of these, which are small, but it also get rid of this one. And I mean, I could do a longer range, and it would leave this and this. So I could do it that way. I didn't do it that way earlier, but let's see what the range looks like. So I'm going to open up a study that plots the ranges. Indicator range. And now this is one that I just created. Whenever. Average true range smooth. So it's indicator that has the average true range, which is the range that is over a number of candles. I think it's 7 candles maybe. And then these yellow crosses are the actual range of that specific candle. You see these ranges here are kind of in the same group. They're the same height. And all these candles are about the same length worth of range. This one has a bottom wick. It's composed of a bottom wick as well as a body. But they're all about the same range. So this range here, I could put a little box around it. This range here is in this area. And this range here is in this area. Okay, so these ranges so I'm trying to find some type of relationship. So these ranges are both kind of high. So if you look over to the right side of the screen over here, you see that the range that I'm looking at is over this line, 25.6, right? This candle is this range, 21.8. So I could draw a horizontal line, and then I could say something like any of the ranges that are over this horizontal line are appropriate. But the thing about that is the horizontal line can move, right? The ranges in a day's time, in a given day's time, based on whatever factors, can be longer or smaller. So typically when you do something like a relationship to a range or volume, you want to do it a percentage of the range that exists over a period of bars. So it would be like if the range is larger than 20% of the average, something like that, or larger than 10% of the average. But this range here is, it's over the 50 smoothed average. This one here is, you got this one, or you got this one. This one is lower, so we just forget about it. This one is over the 50 moving average also. But these are the ones we're trying to get rid of, because all the rest of the candles are pretty much out of the equation, so we're not even worried about those anymore. So we're trying to get rid of this guy, these guys. So how do we get rid of these guys when, if we identify them based on their location, from there to there, all these guys are pretty much over. We got a bunch of them that are over the that horizontal line, and they're over this range as well. So that doesn't really help us. So, like I said, we looked at the length of the body. So like I said, we could have long bodies, and then that would just put it over the horizontal line. But we would technically lose this one. We would lose that one too. Let's look at the EMA spread. So the spread here is going down. These spreads over here are going down, so we can't isolate them out that way. This green line, I think the green is the spread, the blue is the average of the spread, the moving average. The green line is moving up over here. On this one, it's moving laterally. This one is moving laterally. This one is still moving up. This one over here is moving down. So I think what I did was I did a relationship between that. Why is that 7? Because I already changed that. That should be 50. That should be 50. And then to edit the easy language, Oh, if I hadn't figured that out, I'd be hot. Yep, it's 50 over here. So let's make this the default. Maybe that's why, because it wasn't the default. Yes. Okay. And now we got something different. All right, so this 50 moving average here of the spread is moving up. This one here, these over here are moving down. This one here is moving sideways. So we can say something like if the 50 moving average of the spread is greater than or equal to the bar before it, it's a go. All right, so we're gonna make this a value. So value 2 is equal to the average of the spread to the 50. All right, and then we're going to say if value 2 is greater than or equal to value of 2 from 1 bar ago. Yeah. See what that does. Yeah. Boom, I'm done. I did it in how long? 22 minutes. 20 minutes. Okay. All right, so I identified that. That looks good. All right, and then I think I went back and so there's multiple ways to do it, because when I did it earlier, I did some type of convergence. So I actually looked at a convergence between, you see under here, I want this arrow, this area, this green area, I want this area here, and I want this area, I want this area here. I said, oh wow, look at this relationship here. There's a relationship between from this blue line to this green line, and there's a relationship from this blue line to this green line. This is really narrow. This is really narrow. This is really narrow. There's some sense of convergence here. Right, even over here, if you come down from this one, you got here to here, right? So you got this narrowness here. And I mean, even if you did it over here on this side, if you were within that certain range, then go ahead and take the trade, right? So if you're within this range from here to here, and that actually looks good. I actually like that. But if you come over here and it gets closer, it's not that good a trade, right? So even over here. So that might be like a first day of the morning type trade, or up until 2 o'clock type trade. I don't know. That's not really what I'm looking at now, but I was looking at that earlier. All right, so we isolated those two, so that's good. And then what I want to do is just for kicks and giggles, just want to go back through the other days and see when it works. All right, you see on the day before, it did not work well. On 727, I mean, it got kind of lowered toward a dip here. Not so much here, not so much here. What's happening here is all these are below the 9 moving average. It called that one okay. Called this red bar. Called this red bar okay. Called this one okay. But down here, it didn't call any of these well. And what's the difference between these two? All right, so one of the differences is that these are below the, no, this is above the 25 moving average. These are below the 15, the yellow line, but so is this. This is below the 15 also. The 9 is below the 15 and 25. The 9 is below the 15. The 9 is below, it's not below either one of them here. The 9 is above the 25 and is below the 15. So maybe the 9 cannot be below the 15 and the 25. So let's go back over here and see if that applies. Nope. Over here it's, well, over here it's above both, and over here it's below both. But the 25, but it's in the order of 25, 15, 9. So let's see if that applies. 25, 15, 9. Nope, same thing over here. 25, 15, 9. All right, what else is going on over here? It's above the 200 exponential moving average. The 9 is moving down. Okay, all these moving averages are angled down also, though. I don't think that is right. Yeah, all of them are angled down. All of them are descending. Here it's not. You got 2 moving up, or you got the 15 and 25 moving up. The 9 is moving slightly down. I think I know one of the things I did over here was I said that when I look at VWAP, the volume weighted average price, where a lot of the volume is in relation to the price, volume weighted average price, this blue line. I think I was saying, that the 25 moving average, the yellow line, needs to be above the volume weighted average price. And I was trying to find a way to find the volume weighted average price as is accurately depicted here, but I don't think I could. I had to open the indicator, and then I copied it in at the top. So paste that and get rid of the plots because I don't need them. I don't need the standard deviation either. I'm just looking for the VWAP, which I think I decided was price right here, or VWAP val. So I want to go that the simple average of the 25, simple average of 25 must be greater than the VWAP val. And yeah, so I got rid of all those. Now, is it truncated? Is it messed up? Let's see. Yes, it's still got this one. And like I said, I did it earlier and did a similar thing. So I had to put the simple average of the 9 for some reason, because whatever I have as the VWAP there is not calculating exactly like I see there. The VWAP is funny like that, though. It is funny. I mean, it's hilarious. It's hilarious. All right, so I got rid of all those though, and this is pretty much just kind of signifying that that a lot of the movement, price action, is happening below volume weighted average price, and we typically see that when the stock is moving up, it's usually over the volume weighted average price. So I think that's a good one. All right, so now we go over here and we see that we're still getting some that one there. I wouldn't get in the first of the day anyway, but this one here, that's no looking good. I don't know what's going on there. Why wouldn't I want that? For one here, I don't know if it's how it relates to the other ones, but our ranges are below the smooth range. So let's see. I mean, they are over here too. Not sure if I should take that one out. Doesn't look so bad when you zoom out of it. I mean, those look okay. That one looks okay. That one looks okay. But what's going on here then? They're over the green line. They're over the 15 moving average. these are under and they're not doing so well. These are under, they're not doing so well. But I think we're under on the other one as well. Let me see. On the one that we actually, no, on the one that we went for today, it's over here. It's under there. So does that mean that this over here is about to fail? I don't know. Starting to get under it, under the 25. I think I do like that it's under. Something with that 25. And what is that saying? That's saying that on the longer term play, it's moving up. Not only the 25, but the 25 is moving up. But so is it. It's doing the same thing there. And again, I think it's important to notate that that you're not. I mean, what works on one day does not work on the next day. What works on a bullish day, where everybody's into the chart and everybody's pouring their money in, is not going to work on a day where the market is suppressed and everybody's pulling their money out. So what works on one day is not going to work on the next day, and that's why I'm really cataloging all of my scripts, put them in a spreadsheet, notating the setups, and then so when a setup on this day looks similar to what worked on this day, then I'll pull those scripts, apply them to the chart, and see what makes sense for that specific day. And again, it would be great if what worked on this chart worked on the next chart, but I'm not seeing that work. What works on this chart with this personality and these personalities trading it doesn't work on this chart with this personality and these folks trading it. These folks have more money. These folks have less money. They're trading at different times. They have different trading behaviors. Some of them are, smarter with their moves. Some of them are not. So what works on one stock works on that stock. What works on that day or that setup works on that day or that setup. So that's why I'm doing these. I'm making these codes every day so that I can find what works best on every day. But so this is what we have for this day on what is this, the 28th? 28th. Okay. Hey, I appreciate you joining me in the chat out there. But yeah, put something in the chat. Let me know that you're alive and well. All right. Ask me some questions or something so it can make me smarter, make my noggin get bigger. All right. But I put together a bit of this earlier, so I'm just going to really quick see if I can put together something for the 1 minute, because I put something together for each time frame. So the 5 minute, the 1 minute, and the 15 second. All right, so so this one should be saved, and then I'm gonna start another one for the 1 minute. Show me for the 1 minute. For the 1 minute. All right, so let's go that and 1 minute, 1M. Like I said, we got a catalog of all these because they do different things at different times, and we want to be able to come back to it fairly easily. Comp X. All right. So we start that up. That is my template to get going. And then now we got to move this down to the 1 minute time frame. Nope, don't do that. 1 minute time frame. Right on. Each pair has its own. Yeah, it does have its own personality. And I used to like to trade small cap, micro cap. What's going gangbusters for the day. and you can make a lot of money real quick. You can lose a lot of money real quick, but because of the way that those like really break out of the gates, the potential to make a lot of money real quick is pretty good. Have a stop loss in, whatever. But you know, once that move is over, once those buyers who have been holding their position for so long exit, that thing has no more steam, and it can go really south really quickly. So that's what I say. I've kind of backed off of trading the hot stock of the day, and I'm only focusing on one thing. And the one thing is always TQQQ, but today I had the epiphany that I need to look at the NASDAQ composite. I need to look at the underlying asset to TQQQ, and I should get better signals there. All right, so again, the study that I have on right now is for the 5 minutes, so it doesn't work on the 1 minute because it's a different time frame, and different people are trading on different time frames. So I'm going to disable this. All right, and then we're going to add the 1 minute that we just created, and we're going to see how we can modify it to get accurate entries. And then we just kind of do like an overlay. We have the 5 minute, 15 second, 1 minute time frame on our chart, and then when they all kind of show it's go time, then it's probably go time. All right, so we need to look at the 7:31. No, we need to find the 1 minute. Where is that? 1 minute. Oh, here it is. Didn't verify it. Money's around like game of volleyball. Yeah. Oh yeah. What's up, Mac? Stretch. What's up? I know you out there making some money, man. I know you out there making some money. Let's go 1% gain, close out 9.2. That's what's up. Yeah. I'm not trading anything right now. I'm just trying to put together these scripts, man. Are you done for the day, or you still just kind of looking and assessing? All right, so I need to close this out, and then I'm gonna open this back up, and it should be there. It showed me 7:31, 1 minute. Where are we at? 1 minute, 7:31. There we go. All right. All right, so all the yellows pop up, and clearly that's just saying that all these candles are true. That's all it's saying. All these candles are true. All right, so and like I said, when I'm looking for a dip, I'm typically looking for something that is a bear. So I'm looking for close is less than the open. And so we're going to re-verify that. So now it's going to do all the bears, took away all the bulls. Do I want to do it for today? Let's do it for today. Do it for today. Let me do it for the last trading session. So and then I'll do today's later tonight. All right. Yes, it looks funky. Let's see. Looking at food order. Yeah, man. I'm supposed to be getting out of here in a little bit. Head out with the wifey. So I only probably got about 10 minutes on this thing. I don't know if I can make this happen in 10 minutes, but we gonna try. Yeah, I need to get you over to this dark side, man. Get you over to these stocks, these equities. All right, so let's see. I'm gonna just identify this one specific area in here. All right. Now this doesn't look as active as TQQ does. So let's. Oh, okay. All right. Well, I'll tell you what. If our strategy identified this area here, then we want to come to the 1 minute and see if we can find entries along the way. All right. So can we do that? Can we do that? Or do we want the 1 minute to still identify these two areas? Let's see if we can get the 1 minute to identify those two areas. That, I don't think that'll be as fruitful, but we'll see. All right, so the close is minus the open. All right, so the open is going to be less than the 9. We'll still have a lot of stuff here. Let's see. Open is less than simple moving average of the 9. All right. So that took away a lot of stuff. What's happening over here? We really want to capture these. Tell you what. Because it's going to be a lot more. There's going to be a lot more code involved to try to capture everything. Well, I really don't want to get any of this going down. I don't think. I mean, it's cool to get this dip, but again, this dip should be identified on a larger time frame, showing that it's a significant area of support. So I'm just going to get rid of all of this. So if the 9 moving average is less than the 25, I'm going to get rid of that. See what that does. Simple moving average of the 9 is less than the 25. Nope. Gotta spell it right. Got to spell it right. All right. 9 is less than 25. No. We actually want to go reverse. Presto changeo. All right. Close is less than 20. Open is less than 25. All right, so open is less than the 9 is over. Let's say 9 is over the 25. I mean, the 9 is over the 15. Let's go with that. I think I like that better. All right, so then it gave us this back because I do want something down here. Missed all these, but these aren't significant pullbacks. This one's a little bit more significant. And then so I don't want these. So here the 9 is, all right, so there, that's crossing under. That's getting close. That's dropping. That's dropping. All right, what's happening with volume? All right, so here, volume is 6 is under the 50, 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 6 is under the 50. So it works here, but and it's not going to change any of this because all these work. But just for future use, I'm going to put that the volume, so the volume is the 6 moving average is less than the 50 moving average. The yellow line is the 6 moving average and the blue line is the 50 moving average. All right, so let's verify that. This is the NASDAQ composite, so I don't know what it would be on TradingView Mac, but this is NASDAQ composite. So here it's you know, if you see in the background there, it's the $ comp X. All right, so we got that, and then like I said, I don't want this, but what's happening here? The 9 is going under. So one thing that happened for sure is all these moving averages got real tight. Here they got pretty tight too, but all of them got real tight. So that would be my EMA spread. EMA spread got really low. Really low. And it's going down. It's moving down. There it's moving up. There it's moving down. There it's moving up. There it's moving up. There it's kind of going sideways. So I'm going to do this this 50 moving average here of the EMA spread. it's got to be equal to or less than the one before it, and that might clear that up. All right, so I'm just going to make that as a value. I'm going to do average of the EMA spread 50, and so we're going to say value 2 is greater than value 2 of the bar before it. And voila. All right, so greater than or equal to, because I think we lost that last one. We still didn't get this one back. But that looks, so if you look at this blue line down here, I'm gonna, if you see that spread smooth, it says, what does that say? 3.89, 3.20. So that is, I can't see it on this computer screen. You guys ready, Ray? All right, I have been summoned. All right, but I don't like this one. Those are okay, but again, so what I do is I create something that says that if within, I don't know, 20 bars, if within 20 bars, the 9 crosses under the 25, then don't take it. All right, let me see if I can do that pretty quick. All right, so, all right, we got to do like a count if. So, count if SA9 crosses under SA25 within, so then that's going to be within, let's say 20 bars. Nah, it's going to be crossing under the, 20 bars. All right, and so then that's going to count how many times this happens within 20 bars. Okay, so if this value, which is value 3, is greater than 1, then we want that to be true. So I'm going to put not condition 7. And I think that works. Let's see, and not condition 7? Sure, that should work. Oh, I'm declaring it here, but down here I have to put not. Okay. All right, so it got rid of some of these, right? Let's see, let's take that out, and then we'll relook at it. It's just a bunch of back and forth. Just a bunch of back and forth. No, so it didn't get rid of that one. All right, so, no, because it didn't. All right, so how many bars is that? So from here to here is 33 bars. So we'll change this to, 35. And then we'll open that back up. Re-verify. It still didn't get rid of it. So the 9 crosses under the 25 within the last 35 bars. So that'll make that a 1. And then condition 7, value 3 is greater than 1. We don't want it, and not condition 7. And see, this is where I come and I play for hours, just looking at this chart, just trying to figure out how to isolate 1 or 2 candles. Value 3, count if simple moving average 9 crosses under 25. And it did here. And that's 33 bars. Let me open this up, make sure that I got the right definition, that we defined it right, because that makes all the difference. So So you have a true false. Oh, this is true false. No, yeah, no, true. Yeah, true. It's true. Okay, well, that should calculate. All right. Let's say 9 crosses under the 25 and not condition 3. Just for kicks and giggles, sometimes when I put these knots in here, I can get all confused. Get confused to rate it. So let's take out the knot. Just put and. We verify that. Nope. Definitely wasn't. And not condition 7. Or we could put the condition 7 is got to equal 0. So condition, so we put this equals 0, which is just saying that it does not detect any of these happening within 35 bars. Yeah. Bingo. Got it. All right. So, but I still need to go back and modify this. So I would say this is value 2 is greater than or equal to value 2 of 1 to go times 0.95. So that gives it a 5% buffer below it. That might bring some more back into the equation. It did, but it didn't bring this one back in. So I don't know which one actually took that out. Condition 6 or condition 5. Maybe it's condition 5. So we're going to take condition 5 out by putting double slashes. Nope, it wasn't condition 5. Was it condition 4? I thought condition 4 allowed us to keep it as well. We're trying to get this one back. This one in here. That wasn't it. Condition 3. Open is less than smooth and average of a 9. Alright, so I have to go. I keep bringing in more and more conditions and it's not solving the problem. So we're just going to put all these back and yeah. So if the 5-minute fires off, then I come to this chart, put on this one, and then I'll capture that. But I wonder what it did on the rest of these. Yeah, so not bad, not bad, not bad, not bad, not bad. I like those. Those are okay. Not great there. Not great there. A little retracement though, but not bad. So there's a little bit of tweaking that's still to be had here, and you know, you're not going to get the bang for the buck on the first 5 minutes. It's that next 5 hours you put in. You know what I'm saying? So, hey, Mac, if you're still out there, brother, appreciate you, and we're gonna look at the 15-second time frame some other time, and I'll probably be back on tomorrow, but I'll holler at you later. All right, peace.